This video will provide a solution walkthrough to exercise 10.4, focusing on reporting intangible assets on the balance sheet. A requirement for this problem is to indicate how the following items are to be reported as assets in the statement of financial position or balance sheet as at December 31st, 2025. First, on January 1st, a copyright obtained for a book developed internally for $25,000 is estimated to have a useful life of 5 years. We are to assume the straight line method for amortization and that all costs were incurred on January 1st. Second, on January 1st, a copyright was obtained for a book purchased from Athabasca University for $35,000 cash with an indefinite useful life. In the last scenario, on January 1st, 2025, an internet domain name with an indefinite life was purchased in exchange for a 3-year note. The market rate at the time was 8%. The note is repayable in 3 annual principal and interest payments of $14,500 each December 31st. Our partial balance sheet, as at December 31st, 2025, will consist of an intangible assets section as well as current and long-term liability sections. First, we'll start off with a copyright with a definite life of 5 years, which was purchased for $25,000. Intangible assets should be reported net of any amortization and using the straight line method if the cost was $25,000 with 0 residual value divided by 5 years is annual amortization of $5,000, resulting in a carrying value at the end of 2025 of $20,000. Next is the copyright with an indefinite life. That will be reported on the balance sheet at its original cost of $35,000. There is no amortization in this case because indefinite life intangible assets are not amortized. They're periodically reviewed for any impairment. There are no details regarding impairment in this problem, and since we're at the end of the first year of acquisition, there would be no impairment yet. Finally, we have the indefinite life internet domain name. This will be presented on the balance sheet at its cost, which is the present value of the note used to acquire it. If we use our financial calculator to determine the present value, from left to right, we would enter 3N, 8IY, 14,500 PMT, and 0 FV, and compute the PV to be 37,368. This will be the start of an amortization table, and this will be the cost that's recorded for the intangible asset. Again, this is an indefinite life asset, and there is no annual amortization. It will be periodically reviewed for impairment, just like the indefinite life copyright. So that takes care of the intangible asset section of the balance sheet. This leaves us with the liability section of the balance sheet. When we're recording liabilities on the balance sheet for things like notes and loans, we have to make sure that we separate any current and long-term portions of any note or loan. Here's the rest of the amortization table for the note. At this point, you should be comfortable with amortization tables, and you're welcome to recalculate any of the numbers in the table. Since we're at December 31st, 2025, we need to report how much of the loan principal comes due in the next year with the remaining balance of the note as a long-term portion. So from the amortization table, we can see that the next payment includes principal amortization of $12,431. So that's how much will be reported as a current portion of the long-term note payable. The rest is the balance after the 2026 payment, which is $13,426. If you wanted to determine these numbers without preparing an amortization table, it's easy enough to do with your calculator using the amortization function, or amort. If you press the second function button and then PV, the calculator will show P1 equals. Since we want to know the details after the second payment, for P1, enter 2. So press 2 and then enter, then the down arrow. And for P2 equals, enter 2, press the number 2, and then press enter. And then if you press the down arrow again, you'll see that the balance, BAL, is $13,425.93, which rounds to $13,426. If you press the down arrow again, you'll see that the principal, PRN, is $12,431. And that's really all you have to do. So you can save yourself some time and avoid preparing an amortization table by using the amortization feature of your calculator. So for the presentation on the balance sheet, under current liabilities, we'll show current portion of long-term note payable of $12,431. Under long-term liabilities, note payable due January 1st, 2027, $13,426. And that's it. We're done this problem.